Please welcome to the stage Priscilla Sims Brown, President and CEO of Amalgamated Bank, and Kenneth L. Shropshire, Senior Advisor to the Dean for the Wharton Coalition for Equity and Opportunity.
Oh, I'm here?
Well, hello, everybody.
Hi.
Welcome.
These lights
It's
are
an
bright.
exciting event here. So I'm going to let you in on a secret. Priscilla and I have actually known each other for,
25 years?
decades. And we have never spoken about what we do. It's been kids.
Kids. Sports.
Sports, usually some food somewhere. That's
Food.
So Larry
So I'm going to turn the tables and interview him.
So Larry calls me and says, will you help us out this year? And do you know this woman, Priscilla Brown? She runs this thing called Amalgamated Bank. And I'm letting him talk, as I already know who she is, but I really don't know what she does, which is kind of striking. And we've even been in business settings together,
We have.
too.
We have, but usually around sports.
Usually
We
around
used to
sports, in
talk
one of your
about
previous
sports.
lives. Right?
Yeah. And I know your wife and your children. How are they doing?
They're doing well. And
Diane is amazing. So here I am. We are.
I thought you really were, and she's in charge too, clearly. But I thought you really were going to interview me.
I'm really tempted. If you guys want me to, if you encourage me, I will do it.
So I'll tell you what I do that connects up with this, and then where we went ahead. I mean, what we really want to do, is I'm a professor at Wharton, and so ultimately your takeaway today is to steal some ideas about how to do what you do better in terms of having a positive impact, whether it's where you work, the business you own, or what you do day in and day out. And I've run an initiative at the Wharton School called the Wharton Coalition for Equity and Opportunity, and what we try to do is figure out what is it that the leading business school in the world should be doing to have more of an impact on the world than business schools traditionally have.
Wow.
So,
Really?
we should have talked about this at some point.
Yeah. Can we go have coffee after this? We need to really catch up. I mean, that's amazing.
Well, thank you.
Okay.
So, as I was able to figure out what Priscilla did in real life, I said, wow, this is really interesting. So,
Okay.
first tell us about Amalgamated
Sure.
Bank.
Sure.
And really in the context of kind of level set everybody, how is it different from, Bank of America, TD?
I know. It's
kind
sort
a
of
regular-
weird to be having a conversation about social good with a bank. I know many people have said that seems odd. This one is an odd bank. It's really a unicorn. It was literally started 100 years ago by, they were called needle trade workers, but they were textile workers, mostly Eastern European immigrants who had come to the US, mostly escaping something ugly, and they just wanted to go to work. And so they did what they knew to do, but they couldn't get banked, and they weren't being treated very well. So they first formed a union, which ultimately became the Amalgamated Clothing Workers Union. And then they formed the Amalgamated Bank. And the point of the bank initially was to make sure these people could get checking accounts and savings accounts and all the things that people normally need. But over time, they decided that they really needed to make sure we were banking for good, and they wanted to support other people like them, and then just disenfranchise people overall. So over the course of this 100 years, this DNA has never changed. In fact, some credit the Amalgamated Bank for coining the term ESG, but this was way back in the early 70s. So we've been this sort of odd bank that you kind of, if you know us, you love us, but not a lot of people know us. And we're really the bank for changemakers. So for many years, that meant workers' rights issues. And so we took part in being a voice for workers' rights. We built worker housing. We did all this stuff related to unions and lower income workers, mostly in New York. And then over the course of time, it sort of expanded. So now we're the bank for center and left politicians, so everybody from Biden down to a county alderman. We not only take policy positions there, but we also bank these people. We're also the bank for climate. About a third of our financing is sustainable financing. We helped create, I won't get technical on it, but just suffice it to say that the glide path to net zero for many companies was starting to look like it was going to need to be a hockey puck, a hockey stick, just go to the end and right before 2050 do something different. So we, along with others, created a sort of a taxonomy and a reporting process to really make sure that we're not greenwashing when we tell you that we're heading toward net zero. We set our own targets for 2045, and we're the first to have those targets certified by the SBTI, Science-Based Targets Initiative. Now other banks have done it. We also are part of something called the Global Alliance for Banking on Values, which are 70 banks in 45 countries who are spreading this methodology throughout those countries. And so as a result, the large money center banks now also use this methodology. And we've taken big positions on big issues. We push the reproductive rights issue, making sure that not only our employees and their dependents, but set up a fund for employees of other companies to be able to get reproductive services, whether that was in state or out of state. And our biggest initiative in the last year has been around guns. Actually, it's been in the last 3 years. We took the position that after sort of seeing that once you walk back the events that led up to a number of mass murders, there was a similar set of activities that occurred, and those activities ultimately meant that the banking institutions were funding this illegal behavior. And I can give you an example that
Yeah, I think
explains
that'd be very interesting because the idea of how banks can actually play a role in tracking where these sales take place, who are these sales going to and the like, and the fact that it doesn't happen, and how there's actually a mechanism in place to do it.
to make sure.
Talk about that?
Yeah. So the way most people understand this is you have a credit card and you get a little ping on your phone every time there's an unusual charge that's been made, right? So if you're sitting in Philadelphia and somebody makes a charge in Spain, or if you've never bought children's clothes and somebody buys something at a children's clothier, or you tend to be, you stay within a certain dollar range and suddenly your charges have gone beyond that range. You get a little ping on your phone and it just asks you, did you make that charge or not? And you usually respond yes or no, right? Everybody can relate to that? One of the ways we're able to do that as a bank is not because we see the underlying purchase. We don't know whether you bought boys' clothes or girls' baby clothes. What we do know is you bought something at a baby store, and you don't normally do that. And the reason we know that is because that baby store has what's called a merchant category code. And there are merchant category codes for everything you can imagine. The place you get your hair cut, the place the cab driver, the place you buy your suit. Every retailer has a merchant category code, and the code has to be the same everywhere in the world. So whether you bought those shoes in Philadelphia or you bought them, in Oxnard, you're going to have the same code. And this is really, really helpful. And it actually came out of a Republican measure, the Patriot Act, after 9/11, and it was designed to catch all sorts of crimes. So imagine this, somebody's on 95, they stop at 3 different exits, they stop at a hotel, they spend $100 to pay for a room. We don't know they paid for a room, but we know they paid $100 at 3 different hotels. We see that credit card behavior. Before all of that, we saw a lot of purchases at fast food stores and a lot of purchases at inexpensive clothing stores. And after those 3 purchases, which were all done in an hour, which is kind of odd, stopping at 3 hotels in an hour, we then start to see small amounts of money coming into their account, $200, all from men of certain ages. That is a suspicious activity. The algorithm kicks it out. We file a suspicious activity report. It goes to an organization called FinCEN. They send it to the right law enforcement organization. And as a result, a human trafficker is caught. You get it? So it's a pattern of behavior. There's one industry we can't do that with, and that's guns. And the reason is the 6,000 gun stores are exempt from the merchant category code. They are categorized as just miscellaneous or sporting goods. And so remember the 59 people that died in Las Vegas because someone went up into a hotel room and shot and into a concert and all those people were killed? That person followed a predictable behavior, just like the human trafficker. The predictable behavior is they take out new credit cards, generally 4 or more. They go to multiple gun stores so as not to be obvious to anyone. They generally go across state lines because they're worried about whether or not there's some state tracking that goes on, which there isn't. And then after that, within a couple weeks, because they do careful planning, they then commit these crimes. It happened there in Las Vegas. It happened at the Pulse nightclub. And there are other predictable behaviors, like someone going down to Atlanta or someplace in Georgia, buying a lot of guns cheaply, putting them in the back of a car or truck, taking them up to one of the northern states where it's harder, like New York, and then selling them on the black market. And you start to see the purchases down in Atlanta, you see the money coming into the account in New York, you know that they bought at a gun store if you had a merchant code, and that becomes a suspicious activity that we can then inform law enforcement. It's the only thing financial services can do to help mitigate this problem. So Amalgamated Bank filed for a merchant category code for gun stores. It took 3 years. Thank you. It took 3 years, and last September, we got it. Yeah. And I wish that's where the story ended. Unfortunately, and all the credit card companies agreed to implement the code. We have, as a result of the Patriot Act, we all have a legal obligation to identify a retailer by its most closely coded number, this 4-digit number. Unfortunately, after we got it, we started getting a lot of negative attention, mostly from the far, far right and people who think that having a merchant category code somehow for gun stores violates the Second Amendment, which of course it doesn't, and that somehow there was a nefarious intent, which of course there isn't. We can't tell what you bought at the store. We don't track it. We just want to do what we do for every other crime. They've introduced bills or passed bills in 17 states prohibiting this. And only one state has a bill that supports it, which is California. And so it's going head to head. So if you ever think about something you want to have a conversation with your friendly politicians about, that would be it. Thank you.
So, so this is like a beacon of an organization, right? I mentioned 2 big banks. Why don't you level set us on the size of Amalgamated? I mean,
Yeah.
How many branches?
Sure. So we're a commercial bank. As I started to say, we bank unions and politicians and not-for-profits, mostly left-leaning ones, Planned Parenthood, Sierra Club, Color of Change, Black Lives Matter. We are the bank for changemakers, as opposed to a big consumer bank. Our consumer branches and our online consumer product, which we love to have all of you as clients, that is mostly those who are associated with these organizations that know about us. We don't advertise. We are an $8.5 billion in deposits bank, which makes us about 120 to 125 in this world of 4,600 banks. And we have a little over $50 billion in trust assets, meaning we manage the retirement funds mostly of lots of these commercial clients.
And so the next question is the bottom line impact on the business. And I mean, a lot of hesitancy for people to do good because they say,
Yeah.
you can't make money doing good stuff. Why don't you zero in on that
Yeah.
a little bit more relative to your peers out there?
Yeah.
How's profitability?
Yeah, this is where I give my peers a little bit of a break because we, while we're a publicly traded company, all of our shareholders, I just spent a couple of days in Florida with investors, all of our investors, no matter where they are on the political spectrum, they know who we are. We're really transparent because we're a B Corp. We're the largest banking B Corp and public benefit corp in the country, in addition to being publicly traded. Our counterparts, my counterparts and other banks obviously don't have that luxury, right? So all of our investors know who we are, my customers know who we are, and generally are mission aligned. And our employees come to work for us because they care about this work. So we're able to lean in where a lot of people aren't. But we do try to stay within our lane. We stay within the lane of a financial institution and an employer. So our biggest thing right now is that as we look at the common thread across all of the verticals that we have, all the 6 segments that we serve, the common thread is what my mother would call the least of these. It's serving people who otherwise don't get service. And so what we're really focused on right now is the wealth gap and looking for that merchant category code equivalent that exists in the financial services world where we have made it difficult for people who don't have. These entrepreneurs who can't expand their business, or young people who can't get a mortgage, or just people like my family members who work every day very hard but can't seem to get ahead. And so we're looking at all of the ways in which the industry has perpetuated this problem and thinking about what we can do to have the greatest impact. So more to come on this. We've got some great ideas, and we're looking at it. We care about, for example, credit. Credit's a big one, and we want to ensure that everybody has equal access to capital, and that right now is not the case in this country.
I do want to zero in some more on the wealth gap, and if not directly amalgamated in the kind of business that you do, but banks have always played a big role in this. If you look back historically, redlining, if you read Ta-Nehisi Coates or the New Jim Crow, where all these Heather McGhee's book, all of this goes back to banking and the opportunities that weren't there, and redlining to the extent that it still exists today. What role can Amalgamated play, and then what should we be doing with banking today? And I also want to give you a chance to talk about the role of black banks in this and the historic difficulties of black banks really playing a role.
Thank you. That's a really good one I want to get to quickly, so I'll answer the first one. The role that banks broadly play in this is significant. And I don't think people fully appreciate the role banks play in society. It's enormous. It is enormous. So if you think about it, let's just take FICO scores. FICO scores, black and brown people, average is somewhere in the 643 to 647 range, just below the magic 700 number, which enables us to provide favorable interest rates. White folks are above 700. If you include rents in the calculation of FICO scores, it flips. Whites go under 700. Blacks go over 700. Now, I'm not saying that was intentional.
So the idea that the idea, to be clear, that you pay rent on a regular basis, that doesn't go into your FICO score.
No, not as a requirement.
As a requirement, yeah.
It doesn't.
It doesn't make you look good that you pay your rent on a regular basis.
Or you pay your cell phone bill, or you pay your union dues, or you regularly pay some other bill, your utility. Well, that's not true. So really, it's the non-traditional things, the more modernized way of looking at how people live every day. That should be factored into the calculation of whether or not you are a good risk. If it is factored in, then it's better for the banks. It affects how we hold capital and reserve. It's better for the people that you know, particularly if historically you don't have home ownership in your community, right? Particularly if you aren't benefiting from your parents' home ownership and collateral that they could have put up for you. So this problem it becomes exacerbated by the fact that there's a historical wrong that was committed against a group of people. And that's what I think we have a responsibility to address in the financial services arena. And we can, and some people are. And what I meant to say earlier about my peers, particularly CEOs of large banks, there are many that care and do what they can do. I applaud things like B of A's program to consider rents for some of its mortgage loans. I applaud speaking of black banks, I applaud what JP Morgan agreed to do as a result, or after George Floyd, they agreed to fund black entrepreneurship in interesting ways. The problem many of our peers, big and small, have is that they have to answer to shareholders and customers who are on the other side of this argument. And unlike us, who kind of have a group of people that sort of get it, they don't, and that's challenging for people. But I want to talk about black banks because you brought it up. I think it's really important, and not only black banks, but community banks. There's a misconception that if you bank with a small bank on the corner near your home, you are more at risk. And that myth was perpetuated, or it grew during the banking collapses that we saw in the March-April timeframe. And it's just not true. These community banks, the reason there are 4,600 banks, and I'm not saying there needs to be 4,600 banks, but there certainly should not be 200 banks, because these banks perform a really important service. If they are able to get support for some of their big projects that enable them to, projects that they have to hold less capital for, then they have room to provide capital to the small entrepreneur in their neighborhood that they know, the individual that walks into their branch, that they actually relate to and understand. And that is not something that very large banks are going to have the opportunity. They're not going to have the relationships, and they're not going to have the same interests. So community banks play a huge role. Black banks play an extra important role because they're providing capital to those who've been discriminated against and haven't had access to that capital. So what we try to do is, where possible, we want to partner with community banks. We want to make sure that if they have a customer that needs a $10 million loan and they have a lending limit at 2, we can perhaps look at that loan as well and stand behind them, not take away that customer relationship, but just sort of stand behind and get that customer to where he or she needs to be, but also get that bank where they need to be. It's really important to strengthen local and community banks. They really are the lifeblood and the solution to a lot of the problems that you are addressing here today.
In a previous life, I was a founder of a community bank here in Philadelphia, the Valley Green Bank. And,
yes.
And just being in the loan committee room to actually make decisions about who gets funding. So it's really an important piece of this. So I mentioned black banks specifically, but community banks play that role.
Absolutely.
Well. Yeah.
And we're not in competition. There's so much need out there. We partner a lot.
Yeah, because the lending limits, which often just stop at $1 million, $1.5 million, then we've got to turn to the bigger banks.
Yeah.
So as we close out, this is all about ideas that should be stolen. I want to give you one chance to give a final takeaway about what this group, what these engineers should be out there trying to make happen in their community.
Yeah, I think there are a few things. One is, there are CDFI and community banks that could use your help. That's number one. Some of these are not-for-profits, some of them are profit-driven, but either way, your support would be helpful. Secondly, I think you just should think about where you bank, where you put your money. This isn't a commercial for Amalgamated. We're okay. What? No, I didn't mean it like that. I didn't mean it like that. Love to have your business. But, I think the question should be asked of the banks that you use. Where is their PAC being spent? What are they investing in? If they talk about doing a lot of green energy, that's great, but are you doing any brown energy as well? Really look at your bank and think about it not just as a place where you go and you make deposits and maybe take money out from time to time in small ways. Think about it as a real source of capital fueling the decisions and the activities we make as Americans. And make sure that you are comfortable. Think about it as a person. Make sure you're comfortable with that person. Make sure, my clients like to say, I care about where my money sleeps at night. When you're making that deposit, it's going out somewhere. Make sure you're comfortable with where it's going. Ask the right questions. And I know that that's not something we easily think about, because you sort of think of these physical institutions as being kind of hard to affect. But actually, we care a lot as the banking industry. We care a lot about what you think. And I have people who go into their banks and just ask branch managers and ask senior executives questions. They go on websites and they look at what these banks are actually doing. Make sure they're not greenwashing. Make sure they're not making up great projects that they're doing in the community, but masking other things that are happening as well.
Priscilla Sims Brown, thank you.
Thank you. Great to meet you.